Let's kick it off. Hope everyone's got their lunch. It's a very early lunch here in Sydney if you're on this time zone. Hope everyone's all set. So without further ado, what is the purpose of today's webinar? So what we want to cover off today is understanding credit risk. Now, what does that actually mean? What we hope that you get out of today's webinar is that you get informed on what is the industry risk at a macro level, right? So we want to spend a few minutes talking about which industries are going up in risk, which are going down in risk, and what does that mean for you? Then we want to talk about specific customers, like what does it mean for your customer in your industry, and how do we assess risk? How do we look at risk? And we want to share with you some of the methodologies behind how we assess client risk. And then the last thing, which I think is quite key as well, is we want to say, what can you do with this data? We'll share with you the risk data in the industry and for your clients, but then how do you actually do something about that risk if you need to take proactive action? So these are the three outcomes in the next 15 minutes. I talk really quickly, so hopefully you can keep up and understand what I'm saying. And Lewis, before we get started, I think it'd be great to do a quick intro as to who you are and who Illion is, please.
Cool, thank you, AJ. So hi everyone, my name is Lewis Dang. I head up the data analytics and insights function here at Illion. I work closely with clients to deal with risk analytics, credit analytics, risk management strategies and whatnot. Illion, for those who don't know, is one of Australia's leading and largest credit bureaus. We deal with a lot of consumer risk and consumer risk data, as well as kind of commercial data and company data as well. So lovely here to have the opportunity to chat today, and nice to meet everyone.
Thank you, Lewis. And I'm the co-founder and CEO of ezyCollect. I ran a wholesale manufacturing business for many years and understand the pain that late payment causes businesses, and especially the risk of bad payers. So to me, this topic's very close to my heart and one that I'm really excited to share with everyone today. So without further ado, let's get into the macro update, Lewis. So I'm going to hand over to you to kick off the presentation.
Cool. Thank you, AJ. So I've got a few slides here just to run through kind of what's happening in the macro space in terms of credit trends, risks, and whatnot. And then later on, I'll delve a bit more into the micro sense in the sense of how Illion and how we work with some of our clients to look at different industries to identify risks, and then ultimately kind of turning that into not only some of our products, but how to use those products, the data and the models and the trends to your advantage, hopefully to assist with kind of your business outcomes. So AJ, if I move to the next slide, I'm just going to set the scene here, which is really showing kind of what risks we're seeing around the credit space, but just in economy as a whole, from both a consumer and a commercial perspective. Now, I've got a few charts here. On the left here, I've got consumer lending arrears, and what this is really just to highlight some of the consumer lending and the risks that we are seeing materialize. Now, ultimately, those risks, consumer lending on credit cards, home loans, and personal loans, they will flow on to how they spend or specifically not spend on the businesses, and then ultimately impacting a business's bottom line. So tracking consumer risk is important. You can see here, credit cards, credit cards and personal loans, all the arrears are going up. What's worrying a lot of people, or objectively, is some of the home loan arrears. They've been, and that chart is a 30 days arrears chart. So if you are one payment behind, how many people are one payment behind? We're definitely seeing an increase across this. So there's definitely stress materializing, especially in the last 6 months. No surprise given the current condition of not only house prices, rent prices, interest rates, but I guess just everything else in terms of cost of living. How this has translated to things like, for example, company insolvencies, a lagging indicator in terms of commercial risk, but still a very useful indicator. We've seen company insolvencies increase almost twofold compared to 2021. We've got about 6,600 in 2022 already. That's almost the same level, 2023, sorry, that's almost the same level of what we observed in 2022 already. Most of that is in construction, about 30%. About 15% in retail, trade, and services and whatnot. So a lagging indicator, like I mentioned, but still useful to kind of monitor to see where the risk is around. And then finally, trade late payments. So this is essentially trade late payments through the Illion Trade Bureau. We can observe how businesses are paying their invoices. Some of you may be familiar, of course, with this metric. It's just an average. It measures how late beyond agreed terms businesses are paying other businesses. So we are seeing that increase, not just across Australia, but also in businesses in New Zealand, although I think it's probably doing a bit better on the other side of the Tasman. And just general, there has been an increase on this average when you wind it back compared to kind of 5-6 years ago. AJ, if I could get to the next slide. Thank you. So the next slide is kind of drilling down into this trade late payments, because this measure is very useful, not just at a macro level, but also at a micro level. We love looking at industries because there is a bit of a difference between different industries. Different industries will have different highs, different lows, different trends, and move very differently depending on what type of business they are. So I've got here the trade late payments charts broken down by a few segmentations. On the left here is industry. And just kind of stepping through these industries, you can see, for example, food and hotel services impacted heavily by seasonality, but highly impacted by unexpected events. So, for example, something like the recent telco outage, and also just spending downturns. It's on an average about 17.9 days late. That's the highest mean time. That's the highest it has been for some time, going back almost 10 years. But there have been cyclical kind of trends, and it has happened before that, those highs. So, for example, in kind of the mid 2020s during that COVID period. Construction, we go a bit deeper later, but construction, very complex contracts, material cost increase, labor costs as well. So this has also been pushed up. Historically, though, they have been one of the better paying industries. Two other industries are actually doing quite well relative to others: the manufacturing, wholesale, trade. I guess being more on top of managing their payments businesses to businesses, might be kind of down to just due to the structure of their supply chain, or maybe perhaps kind of less friction when they're dealing with business to business transactions. And then retail, very similar to kind of hotels and foods, very impacted by kind of seasonal fluctuations and tight profit margins, competitions, whatnot. Company size as well is quite interesting looking at this interaction. Historically, we see them smaller companies, sole traders, paying a little later, probably more because they tend to be more price takers. Larger companies also paying a bit more later on average historically, maybe because they are price makers and therefore can afford to kind of make those payments a little later. What we are seeing in the last 6 months, though, micro businesses starting to definitely tick up on this metric, kind of significantly shooting up to kind of almost 16 days on average. So we can see the stress flowing through that segment a bit more. And of course, if you drill into a cross tab into industry and size, you're going to see quite a few different interactions as well. AJ, thank you. If I go into one of the industries, this is one of the ways. Now, of course, having only 15 minutes, we can't go through all the industries, but this is kind of one way we like to look at it when we drill down into even further detail into sub-industries. This is at a 3-digit ANZIC level, I believe, and it's just on construction. And it's showing you, construction is a nice use case because it's got segments that kind of flow through the process. So, for example, structure services, which is kind of like the building of a building, installation services, which is your electricians and your plumbing, and then completion services, which is like your painting and your cementing and tiling and whatnot. So we like to kind of drill down into these industries this way and look at kind of these 3 key metrics. So I've got insolvencies on the right-hand side here, so lagging again, but you can see here the installation services seems to have the biggest increase over the past a year or so, or since 2022. Completion services actually doing a little better. But on the trade late payment side, it's kind of flipped a little. We're kind of seeing painters and tilers struggle a bit more, whereas electricians actually have been managing quite well. That's that orange line. It's got electricians and I think plumbers in here as well. But electricians actually seen a year-on-year downward trend on that. We also track activity, which is also built off a lot of the trade data we have, and we call this the Illion growth index, which is essentially looking at the amount of trade we see in businesses in the last 3 months compared to an average period back in history. And what we are seeing is, in construction, there is activity, different levels of activity in different sectors. We're seeing a bit more in the kind of the structural side and the planning and the actual building bricklaying, but less so on the kind of completion services that's been down over the last few months. It's a very kind of quick way of looking a deep dive into a particular industry. What we do like to do with all that data, sorry, if you go to the next slide, is to summarize all of that into scores, which some of you may or may not be familiar with. With all those data points, we create a few of these commercial risk scores to help our clients understand this risk. So late payments risk, failure risk, which is whether a company fails in the next 12 months, and late payments, whether they go into late payments in the next 12 months. I've just got an average score here, just to show you at the baseline what these different industries are and what sort of risks we think they face in the next 12 months. Like I mentioned, the better performing ones are things like wholesale trade, manufacturing, but I guess the slightly higher risk industries are more centered around that retail trade, the services industry, where it is very dependent on a lot more factors going around in the economy that are not doing very well. And construction, actually, while it's still on the lower end, it's actually been improving in the last few months or so. Cool. AJ, I might hand it back to you.
Thank you, Lewis. That's great. Well done, considering you have a baby next to you as well. So well done doing that. In terms of that excellent data, right, that we've shared, we've worked deeply with Illion to say, how do we actually make that actionable for you as a business? How do you take that data and implement it for your own business? So I'll just spend the next 2 or 3 minutes taking you through how you can take that data at a macro and at a micro level, and then do something with that in your own business. So one thing is, if you're an ezyCollect customer or if you're new to ezyCollect and you haven't seen it before, we've taken those failure risk scores and we've taken those late payment scores and we've taken the data that you already have on your own clients in your own ERP, and we can help surface that through like a live dashboard. So what you're looking at here, for example, is a dashboard that you can log into ezyCollect and pull all the data from your ERP or your accounting system, and then we overlay on that the Illion data around late payment and failure risk that Lewis just showed you, and help you group your customers to give you a sense of, okay, which of my customers should I be really worried about? So if someone is like, in a bad debt risk, it's determined that Illion sees it as a chance of failure is quite high, chance of late payments quite high. We see your own ERP saying, hey, that they're paying you really late, and those are your customers that you need to probably either stop trading with, do something different, like maybe send them to debt collectors, or take legal action, right? And we'll surface the data for you in a dashboard, and then you can actually do something with that data. Something that's really, really kind of, I think, useful in these times, especially when Lewis mentioned a lot of industries are going up in late payment. So if you're selling to hotels, for example, or the food and beverage sector, those are getting later and later based on the data we've seen. So you might want to, if you're a business that's selling to that sector, you might want to get ahead of those trends and see which of your specific customers are at risk. Of course, not all your customers are going to be bad. This is just a high level sort of view. Now, that's one use case if using the data. The other data we use with Illion, which I think is really, really useful, is more proactive, even saying, hey, which of your customers are you going to be concerned about? Perhaps the risk is slightly high, like they're in the watch and monitor, meaning that, hey, they're starting to show signs of getting later. You can, through the Illion service with ezyCollect, add them to a monitoring service. What that does is it allows you to get real-time emails into your inbox for different adverse events when the score changes. If a score becomes, hey, it's medium risk to high risk, and I'm simplifying this, Lewis, then you will get a alert through ezyCollect powered by Illion, saying that, hey, these customers now have gone up in risk because of XYZ reason. It could be a court action, it could be director change, something, PPSR, a whole bunch of different categories. You get those alerts into your inbox, meaning you can help anticipate and then mitigate those risks by either stopping selling to them, sending them to debt collection, putting them on a payment plan, doing something that allows you to get ahead of the curve, right? So, in 15 minutes, there's not a whole bunch of time for both Lewis or myself to go deep on this, but hopefully it'll give you a flavor for what's out there if you're a business and you're looking to learn more about how to protect your business. Lewis has got something that he wants to give away for free to everyone who's joined the call, so I'll let you kind of do that, Lewis.
Cool. Thank you, AJ. So There's a few reports that we generate and we publish on our website, and the links here, which gives you a bit more flavor on not only what we do, but some of the insights that I talked about today. I've got the economic health check, which runs through not only commercial risk, but actual consumer risk as well. Like I said, they both interact. It's always great to monitor both. And then finally, we have a credit stress barometer report, which focuses specifically on consumer risk, and uses some of the credit scoring data just to see how consumers are faring on spending as well as lending as well.
Yeah, and you'll all get an email with the link to these, so you can download them. Don't need to, write them down at the moment. You'll get it in an email. And from an ezyCollect, if you want to kind of dip your toe in and see what it's like, we can give you 3 free scores on some of your most troublesome customers. If you're looking to see what they look like, just get in touch with ezyCollect. And we'll send that to you as well in an email on how to get in touch with us. And if you're an existing customer and you want to try this, feel free to contact your customer success manager, and we'll give you a good deal for the next 3 months on that as well. But thank you everyone for joining us today for this super quick webinar. We were 1 minute late, Lewis. I think that's pretty good. So I appreciate everyone's time, and I appreciate your time, Lewis. And thank you, everyone.
Thank you.